Pierre Lawson, aka Nova Man. I'm here followed by my guest apprentice, my son here, young Elijah, young King Elijah, I would say. This guy is brilliant, man. I don't know what he's gonna be when he grow up, but I think he's gonna be something great. Trust and believe that. But he's gonna be here with us today on this video, and he's gonna be learning too. So he's here. He got his pen ready. Show him your pen. He got his pen ready. He got his pad ready. He's gonna be taking notes. And so today we're going to do a lesson about limit orders. We're going to talk about limit orders and how they actually work, right? And how they work at your advantage. There was a question that was posted in the group. Somebody wanted to know, an experienced trader wanted to know, why their order did not get filled when they placed a limit order. And so I'm going to actually show you what's really going on when you place your order as a new trader. Most new traders think that just because you place an order that it's going to get filled. That is a lie. That's false. Just because you place an order for a trade doesn't mean it's going to get filled, or unless you place a market order. So we're going to dive into these two different type of order types. One of them is market order. One of them is limit order. Market order, limit order. Write these down, Elijah. Two types of orders: market orders and limit orders. Now, as a general rule of thumb for traders to use limit orders. I use limit orders. My class uses limit orders. That's what experienced traders do. We use limit orders. But there are market orders that's out there as well. And so you say, why would one use market orders? Well, you tell me. So I'm going to tell you about how these two different ones work, and you tell me which one that you want to use, right? But I would tell you that the reason why most people use market orders is because they just need to get a quick fix, a quick fill. And they don't care about having an edge. They just need to get an automatic guaranteed fill. So with a market order, you get a guaranteed fill. With a limit order, you have to negotiate for your fill. Okay, and I say that to say this. Okay, so I'm gonna tell you like the whole premises of the stock market. Okay, the whole view of the stock market is that this is a market area. Okay, this is where consumers buy and sell goods. Here we're buying and selling stocks or option contracts, right? For what we're doing here, futures and all these other products. But just follow me here. When you go and shop on eBay, okay, same thing. Stock market, just like eBay. You go on eBay, you see a nice, what I got here. You see a nice watch. You want to buy this watch here? They got it on eBay. There's a seller who got a market order in there for you, and you can automatically get a fill. And you say, this watch here, $25,000. You can get it for $25,000, guaranteed. So that's a market order. So market orders, you guarantee get your order filled. Now they have other sellers and buyers that's on eBay that have bids, so you can bid on it. So the market order is going for $25,000, but if you can go bid on this, you can actually get this watch for $18,000. That's what limit orders. That's what limit orders do for you. It allows you to have the edge as a buyer and as a seller because you can negotiate these things. Would you rather buy a $25,000 watch at $25,000, or do you want to buy a $25,000 watch at $18,000? Right? So that is why we use limit orders. Okay. And so one more tip here is that for most of you who work, you have salaries, a job, you have salaries. You'd be amazed how you may have worked years at your company and you make a certain salary. You'd be amazed how new people come in and they make more money than you. Well, one of the things that they do is when they actually acquire the job, one thing that you failed to do was to negotiate your salary. You went in, you took what they told you the salary was. That's market price. Okay, that's a market order. You took what they told you that the job was going for. You did not even negotiate, right? The smart guy who got the job and say, I understand this job is paying $50,000 salary, but I wouldn't accept it. I would not accept this job unless you can give me $55,000. Can you make that happen? So now you have people that's going in there doing the same thing that you do, but make more money than you do because they simply negotiated. Same thing here in the stock market. That negotiation is the limit order. You have the edge as an investor. Smart investors use limit orders. Okay, that's the reason why. But I actually want you guys to see the mechanics of how this works, and I'm going to show you here in Thinkorswim. You can actually plot this stuff out yourself. Okay, I'm going to show you, and I'm going to show you when you put your order in there, what happens to your order and why it doesn't get filled. So you're going to be able to see this here real quick. If you got your charts up, I'll show you guys here. I like to actually take a look at this. When I place my orders for entries and exits, I go in on my 5-minute chart. My analysis, because I'm a swing trader, I use bigger time frames like the the daily or the 30 minutes or whatever. But for my entries, I'm pretty much on a 5-minute chart, right? So I can hedge. And so basically what the 5 minutes is every 5 minutes, a new candlestick is going to form. All right. It tells you here, 5 minutes. All right. Now, what's in these candlesticks is price action. These are the contracts. These candlesticks are just like a nice visual of what's really going on the inside. So I'm going to show you how you can actually see it yourself. If you go here to your little grid there, click on that and click show sidebar and sales. Boom. You see it just pop up? Take it off, back on. It's right there on your right side. Okay. Show the sidebar so we can see our sidebar. And I want you to click on active trader. So when you see active trader, you're going to be able to see the work that's going on. Okay. Boom. So I click it. Bingo. All right. When you click your active trader, it's going to pull this sidebar up here. All right. And the first thing you can see at the top of the grid is buy market order, sell market order. Now this is for you stock traders. You trade in stocks, you can buy, sell them right there. Quick click of the button. Okay. But remember, buying market, you're just going to get it for what the market, is going to give it to you for. Who knows what that's going to be? Nobody knows. You're going to get it, but it's going to be at your disadvantage. Trust me. All right. So that's the market orders there. Quick there if you're on stocks. But what I want you to see here is that the bid size, these are bidders. Okay. You want to buy something, you're going to bid on it. The buyers are bidders. Okay. And if you're selling something, you're going to ask for something so that you can get off, get it off. So these are your sellers. So just think about the green side, or people will come in to buy. So put your order in. This is what it looks like. This guy here, he got 10. This guy here got, it just moved on me. So these things are moving, okay? But just keep in mind, green, these guys are buying. These red orders, these are people that's, they ready to sell. They got their orders in the queue. All right, so they're just sitting in the queue. You can see what's there. Now, the negotiation happens here in the middle. See that gray line? That's where, they've negotiated and they came to a mutual agreement. That's what they're going to buy it for, okay? And so that's what you see. Now, once these targets hit, you start to see this gray line moving, going down because orders are getting filled. You'll also see it reflected in the prices here. And then you also see it in the candlesticks here every 5 minutes. Because I'm on a 5-minute chart, it's going to show this every 5 minutes. All right. So even though I go on a 1 minute, you'll see it every 1 minute. So I like to look at the 5 minutes. Swing trader, day traders, they use 5 minutes too, and more than likely they use one minute charts, so they can have an edge. So now we got that understood here. You guys see this is where you're negotiating at. Okay. We're option traders, so I'm going to show you guys some options work. Okay, so we're going to go to the trade tab, and we're going to pull up Apple. And actually, let me go back to the chart real quick. Okay, so let's say I believe that, so I'm going to make a quick analysis here. It doesn't really mean anything, but because I have my Fibonacci, so let's say this is a point of resistance. I see right now Apple is going down, but it looks like it's starting to bounce back up. Let's just say that, I believe that Apple is going to go down. And so therefore I want to make a bearish trade on this one. Okay, cool. So I'm going to put analysis to the trade tab. Let's say I want to actually place a quick trade here. Let's do a spread. You have the classes that you already know how to execute these trades. You don't have them, I definitely encourage you to get the trades. I'll get the classes so that you can understand what's going on here. Basically what I'm going to do is a vertical call spread. So we're going to get some money up front. We're going to do a 5 line, 150, 155 call. This is just one example here. Okay, so you actually craft in your orders, craft it down here. So I got the 150, 155, that's 5 wide. You can see it here on this chart here, 150, 155. Boom. So then we have limit order types are here. It tells us limit order. Okay, so I got it on limit order. Now there's no price thing here. This is where you actually negotiate the price. You just set the credit that you're going to fill. So tell us that if you're going to receive a credit when we get into this trade, then we're going to collect money up front. All right, we can negotiate that with a limit order. A market order is here. So you just click on that. You can choose market order. Market order, you see that the price goes away. There's to negotiate. You're going to get it whatever the market is going to give it to you for. It's going to be guaranteed, but you can't negotiate. You negotiate, go back to the limit. All right. And so I'm going to show you guys here what a market order does real quick. So I'm placing a market order. And you can see it in the field. Japan, like show you something real quick. You confirm it's in, and you don't have to worry about all these other numbers and things like that. It's just telling you my max profit is 156, max I can do 343. All right, so I was telling you, I'll be here, just hit send. There you go, you got filled at $1.59. So right now, right now 159. So that's $159. That's what we got to fill for on that at market order. Okay. Now I'm going to close this trade. So I'm gonna buy it back because I sold it. When we sell, we get a credit up front. I'm gonna buy it back so I can close it out. I'm gonna do that market order again. All right. Boom. Send. All right. So I bought it back at $1.60. So I did a 160. All right. That was a loss, just so you know. So the market filled it at $1.60. So I sold it for $1.59. I bought it back for $1.60, right? So I lost $1, right? That's what that is. Now, that was a market order. When you take the same order, you want to do a limit. Same order, you click this. Boom. Okay. So when we selling, the amount that we sell it for is how much we take in up front, okay? So I got it on limit order. You see limit order here. And then there's prices where we negotiate. Now, it's not guaranteed for me to get filled. But if I do get filled, I will have the edge. So I'm going to show you where we get filled on that. 159. Mm-hmm. All right, so it's going, it must be going, I don't know, up. Excuse me, it must be going up. So let's see. 159. Let me negotiate it at 162. You see how it did not get filled? It did not get filled. And so as new traders, you probably panic. Say, hey, my order didn't get filled. Well, let's actually see where your order is at. Okay, boom. So that's what I tell you, when you actually make this chart here, look on a 5-minute time frame, a small time frame, intraday time frame. It'll show you your order. You see that it says limit right there? Well, that's my order. Okay. The line right here. I'm trying to get filled right here. But this is actually where the market is at. You see that? Okay. The market is here. Now these candlesticks must move to my order for it to get filled. Okay, so hopefully the light bulbs are going off on you right now. Okay, so you do this on a 5-minute chart, you can see this. So I did not get filled, and it's still not going to get filled, but I need to get filled. So if I want to get filled, what I'm going to do, I'm going to right click on where it says limit. And by the way, you don't have to worry about, this active trade button over here right now unless you're going to buy stocks. I just wanted to show you. Oh, well, it just got filled. Fast enough. All right, was it 162? It got filled at 162. Sorry about that. Trying to recreate it. I'm gonna do another example so I can show you how you can actually get the fill on it. But it did get filled. It went to 162. So somebody actually took it. And so basically, for market order, you got it at you took a $159 credit in, but for limit order, I took in a $162 credit. So who has the edge? I got the edge because I negotiated on it. All right. Same way like I told you earlier, you didn't negotiate on your salary, so somebody's making more money than you at your job. But anyway, it's pretty cool to see it on these charts here. So let me try to place in another order. Is that this? Yeah. I don't know. It's like some kind of lag we got here. So it got filled. Let's buy it back. So we got to buy it back. So we got a 162. Right now I can buy it back for 157. Let's try to buy it because we want to buy low, sell high, right? We sold it for high for 162. We're going to try to buy it lower in the market. And so what's pretty cool is this mid and natural. These kind of tell you, like, gives you a good range of where you can get filled. So this mid is just telling you the midpoint, right? Doesn't mean you're going to guarantee you get filled, but it's a good place for you to understand what to negotiate at. So I know mid price is 156. Let's say I want to get it at 155. All right, so I negotiate it down, and then I'm gonna hit confirm, and then I'm gonna hit send. All right, boom. So now this is my order to close. All right, this is in there. My order to close is there. All right, you can see my order to close is here. Price movement is there. I need to get filled. I'm a little beneath where it's at right now. So because I did not get filled, right? And so some of you guys probably go to work and things like that. So you put your orders in, you don't see this stuff happen through the day. Yeah, you can put it in there and just let it sit and it's going to get filled. More than likely get it filled if you predicted the market to go in that way. So remember my analysis that this is going to go down, and so it's actually going back up, right? So because it's going up, it's going further away from what I was predicting. So that's why it's not getting filled, right? So, but I can take off some of the profits that I want to take to get it filled. Just for example, I'm going to negotiate. I'm going to go to 158. Boom. Click it. So I can sit here and watch it. You see how it moves closer to the candlesticks. Get closer with you guys. So it's still not getting filled, right? Cool. I just cancel and hit replace order. 158 didn't get filled. Let me do 159. Boom. And we're right here, but it might slide away from us because it's kind of slightly above it. But normally, I like to see the candlestick crash into my limit order. And as it continues to go up, we're losing our edge on the profit because we're trying to get in now. That's the whole thing. We're trying to get in now. Let me take it to 160. Boom. Go up. And then I'm going to just leave it here for a second to see if we can get some traction downwards. Because when it come back down, it's going to fail. But right now, because it's continuing to go up, it's not getting filled. So it's going up. It's going up closer to my 8.6. It's not getting filled. But when it come back down, I can get filled at that. Boom. You see that? I got filled at $1.60. Tell you right there. All right. So I got filled at $1.60. Go ahead, put that down there. So I just made $2. Right? Yeah. Well, that's all I kept from that whole trade. I took it in 162 and had to buy it back at 160. So I only made $2 off that trade. Now, ideally for a trade like that, you want to make at least 50%, right? A little $2, that's nothing. But this is just for the idea for you to see how this limit order stuff works, okay? And so with that being said, limit orders, market orders, you guys now see how the limit orders and the market orders work. You see it live on the chart, okay? Just because you place a limit order does not mean that it's going to get filled guaranteed. You want to guarantee fill, and you don't care about having the edge, you just want to go buy it at the store price, then market order. That's what you go do. Like you buy stocks, you buy options, and then the limit order is where you get the edge, you get to negotiate where you want it to go. Oftentimes, I set these limits, in the future so that I can have the edge, and then I watch the stock fall right into place to where I want to take it at. All right. So hopefully this adds value to your trading career. If you guys got any questions, send me questions over to info@wallstreetjackboyz.com. Make sure you get the classes at wallstreetjackboyz.com, and that's Wall Street Jackboyz with a Z. Make sure you subscribe to the newsletters that I'm actually putting out here. You guys can get some extra jewels that's in there, and join us on live on Facebook as well. We actually get it in today. But with that being said, me and my young king Elijah here, we're gonna be headed out. You heard me? Peace.